back to my morning report chart. Suppose on Tuesday, 27th of June, with me, Rich Pro-Market Analyst at Hantec Markets. We're going to look at dollar yen now, and we have seen dollar yen, which broke high yesterday. It seemed as though that the market was gaining a bit of traction to the upside, having had that sort of drift lower last week. Big strong bull candle, but there's been a bit of a retracement move today. 25 ticks, nothing too significant, but you'd still sort of point towards these momentum indicators, which are beginning to sort of gain a bit more traction of positive momentum. And it looks as though the market is sort of looking to sort of push higher and push through this resistance band. Now we have a resistance band 1155 to 1220. 1155 is that fib level, that 38.2% fib level, but also 1160, whereby it was these sort of lows that we saw back from February and March, and then up to 1220, which was that high that we saw in April. Now that high that we saw from April was again retested mid-late May. And again, it's been tested again today, but sort of failed initially. So this is an interesting move. If this market does fail and then you start to see a second corrective candle, maybe again that resistance comes in. So sort of the band between 1155 and 1220, I think, is key medium term for the dollar yen, and it needs to be sort of broken to the upside to really sort of generate some bull momentum going on. But for now, it is improving on the momentum stakes, but still not really decisively strong. And I think a breakthrough at 1220 would do that. But as I said, that initial look today at 1220 failed at 1207, rolled over. Dollar started to weaken again, and it'll be interesting to see if these hourly momentum indicators remain sort of positively configured. RSI above 40, MACD lines above neutral, because the stochastics are falling away quite sharply. And if that continues, market moves below, say for example, I mean, let's zoom in here. You've got the initial support, I suppose you could argue 1133, but basically that 1110 level, and then 1092 that the level we saw on 22nd. These are the levels that obviously need to remain intact, but yesterday's low of 1110 is clearly a key level near term, because obviously that was the start of the strong bull candle, and losing that on the downside would be a very disappointing move for the bulls. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.